Hi, I'm Rick Albert, and welcome to The Key to the City of Angels, the podcast where we unlock the secrets of Los Angeles real estate. With over 300 real estate deals under my belt, I've seen it all, from house hacking strategies that build wealth to helping clients close multi-million-dollar deals in one of the most competitive markets in the world. Every week, I'll bring you expert insights, market trends, and inspiring success stories to help you navigate the LA real estate scene. Whether you're a first-time buyer, an investor, or just curious about what it takes to thrive in the City of Angels, this podcast is your guide to making smarter decisions and achieving your goals. So grab your keys. It's time to unlock your path to prosperity in Los Angeles real estate. Hello, everyone. Rick Albert here with another episode of The Key to the City of Angels. I'm super excited to have James Davis here. Thank you so much for coming on.
Thank you for having me. Looking forward to talking about all things property management and RFPs.
Yeah, as I was telling you before the call, I'm excited because I do own rental properties, some self-manage, some with property management. And I do think that there's a major shift that's going to happen in 2026. And I'll tell you my predictions. I'd be curious to get yours. But first, tell me what you guys do and how you got into it.
Absolutely. So we specialize in primarily government contracts.
Okay.
It's common that the government is required to put out a request for proposal. And you'll hear this phrase probably a lot over the next hour, RFP, request for proposal. And really what it means is the government's looking for a vendor to help service, in our case, rental units that the government owns. We've been a part of a couple of really big ones here in California. The city of LA is a request for proposal that we helped respond to, as well as the city of San Francisco. So they are looking for property management services to augment what's happening in their structure already.
So these are properties that the city owns and they're renting, but they need someone to manage it. So they go through you to find these property managers.
Correct. Yes. They put out a bid on their website, basically, for any property management to jump in and apply for that bid. What we specialize in is guiding those property management firms through that bid process. A lot of them are 75 pages. They're very detailed about the operations, the organization, the strengths and weaknesses of a property management firm. There's typically some politics involved in the conversations as well. Not so much as far as selecting, but as far as the optics. If you're going to have a housing authority hire a property management company, you're not going to hire, this person who manages 3 duplexes. You're going to hire a property management firm with a proper HQ that's done this before and has a history of doing this. So what we do is specialize in making sure that your bid is a bid that reflects not only the needs of the organization that's requesting it, but also shows that property management company in the best light. It's the strongest proposal that they could put together.
Okay, that's cool. I get that, because one of the things I've learned in any business is there's people like, oh, I'm not a salesperson. It's like, you have to. That is like my job as a real estate agent here in LA is not to sell homes. It's client acquisition. Loan officer, their job is to sell loans. Property management, there has to be a division that sells their services.
Yes, exactly. And you had a guest on early October that you guys were talking about the exchange of how brokerages are going to change. And where the profit margins are shifting in the brokerage world. And I think a lot of that same information, those same tweaks are happening in property management. As the margins get thinner, the door, either you've got to grow in units or you've got to grow in efficiency. And the best organizations are doing both. And that's where we come in, is to help with that.
So what are you seeing? Because one of the challenges that in property management services that I've seen from the outside looking in is, okay, you're charging anywhere from 6 to 10% of the rents. Sure. But the reality is you can't run a business on that. Like, how do you, even I have properties out of state, even if they charged me 8 or 10%, it's still like $100 a month. Like you can't pay an assistant on that. And so now I'm starting to see all the markups, the maintenance, the finding tenants, the renewal of leases, all these things. And like part of me as the owner is pissed because I'm like, now I'm not making money, but I also understand like, how are they supposed to run it? So what are you seeing?
Yeah. And I see it from a variety of sides. Coming in from my experiences in property management, I've got 17 years of building portfolios and running property management firms. That experience skews my perspective towards the property manager, right? So when that rate card comes out, when we're bidding on these proposals, and largely it's for government dollars, focusing on is, are we charging enough for our maintenance services? Are we charging enough for all of the things that you just mentioned? A tech fee, you'll start to see that in property management if you're not seeing it yet.
Not yet. I've seen the rates go up, but now I got to pay attention more. Okay, got it.
Yeah, and amenities fees to the residents. Certainly you see those on complexes. If you may not see them in smaller unit counts, but on communities and complexes, you'll see tech fees, you'll see maintenance surcharges, you'll see gas surcharges, you'll see resident benefit packages. Like all of these things add up to a significant profit margin for a property management firm. And so it's important to include those in our bids. Sometimes those bids go through and it's, I really wanted this bid. You can't outsell your inefficiencies in operations. So if your company's not really locked in, more doors isn't going to solve it. And any property management firm, if you're thinking to yourself, oh, I'm just going to bring on more units, that's how I'm going to outpace the increase, then my question that typically shuts that conversation down pretty quickly is, how many? If you're telling me the answer is more doors, then you should be able to quantify how many more doors equal a profit margin that you're happy with and the operations of sustaining a quality operations of a business. And the how many question cuts through all the bullshit. All of a sudden we start to dig into some honest answers. Property management firms, in my experience, are largely built by people who are amazing at sales. And with that talent in sales, typically comes a lack of understanding of the operational aspect of it.
It's two different personalities, to be fair.
It's two very different personalities.
It's very different personalities.
Yeah.
That's one of my big things is I have SOPs all over the place. So we're actually condensing all the SOPs because of that, because it's a different mindset.
Yeah, absolutely. And then the SOPs is only the start of that.
You still have to execute it.
You got to get the team to actually follow those SOPs.
Right.
More days than they don't follow them, because the excellence is not at the SOP. The excellence is actually above the SOP. And the SOP should be our bare minimum of this is what done correctly looks like. And then the only variable is, can I do it faster? If this is the bare minimum, can I do that bare minimum 10 times a day instead of 3 times a day? That's where that scale comes in, and you can really see some growth.
Yeah. And that's where technology kicks in, right? Like you take these SOPs, which for those listening, standard operating procedures, basically how to do everything. So now what I'm working on is putting it all into like Notebook LM, where I basically create like ChatGPT, but the answers are from those SOPs.
Definitely. Yeah, that's great.
So that way if I have an assistant and the assistant needs to know an answer, it can ask it and get the answer, and it's from me.
Yes.
It's the idea.
100%. And that frees you up as leadership. That frees you up from answering a question that should have never come to your desk in the first place.
One of my favorite leadership articles was the Harvard Business Review about the monkey. Are you familiar with that one?
No, tell me more.
It's actually one of the most read articles of all time. And the idea is the monkey is the problem. So employees will go to their managers with the problem. And it was very common for the manager just to take on that problem. Here, I'll call them. I'll take care of it. They're taking the monkey and putting it on their back.
Sure.
So it's all about how do you keep the monkey off of your back?
Yes, absolutely. And I think it's 1 Minute Manager, right? Discusses this monkey and how to hand the monkey back to the person who should actually be solving that problem.
Yeah. And it could be something as simple as, okay, we can work out the problem. You need to call so go ahead and take care of the call. It could be something as simple as that. So that's really interesting. So I'm actually curious for some of these government contracts, what is the city of LA? What is San Francisco? What are they looking for? And how does that translate knowing that there's rent control and all that?
Sure. Yeah. So the government as a whole are looking for firms who do this, who manage properties and who manage properties in these kinds of specific areas and are familiar with the local laws of these areas. If I were to try to take a property management firm that only operates in California and try to bid on a project in DC, right, it's very likely that there's somebody who is legitimately more qualified than my client in California who work in DC. So number one is it the right fit overall? Number two are these SOPs that you just got done talking about, does this company have a structure? Do they have a plan for how they grow? And that's the thing that Awarded really helps organizations with. We've been through, I don't know, probably 50 or 60 transitions throughout my career of big properties coming into a property management firm. And the things that you learn on the first one are very different than the things you learn on the 50th.
Sure.
And you start to build out, okay, I've seen these questions before. I've seen these problems before. I've brought on this kind of property. I know it needs this level of compliance. And you start to just put all the pieces together when you do a lot of them. So that's another thing that the government agencies are looking for. There's typically an evaluation criteria, like a grading rubric within the initial request. So you can go through and see what areas are going to get looked at through a magnifying glass. And that's one of the things we do as well when we're guiding clients through these bids, is that evaluation criteria and where to spend the most amount of time. Like I said, these RFPs are typically 60 to 80 pages, somewhere in there. The responses are typically 80 to 100 pages. And lately I have been seeing some that say no more than 20 pages. You can't reply with any more than 20 pages. We're done reading all of these RFPs. And that's fair too. It's just a new trend that I've been seeing lately in California. But those are the things they're looking for. They're looking for a professional property management firm that's not necessarily run by a bunch of dudes who went to college together and bought some property and developed a thing. They're really looking for professionals in the industry, just like real estate sales. You can ask 10 of your relatives who knows a realtor, and all 10 of them, and maybe all 10 of them will tell you they are realtors. Right. Who's done the 300 transactions that really quantify the level of expertise that they have, particularly in a market like LA? If you've done 300 transactions in LA, you've got a pretty good grip on what's going on in LA.
It gives you like tabs. It's fair. Like I've worked with agents where they've only done one deal in the last year.
Sure.
And I'm not saying you need to do 100 deals a year. Honestly, 6 to 10 deals gives you a rough idea of what's going on. But it's like when I've worked with agents where they've only done one deal in the last year, it actually makes my job a little bit harder because they have certain expectations. Because I've been in the business for 30 years. That means absolutely nothing. Because what happened 30 years ago is very different than today.
Yeah.
So it doesn't really equate. So that's interesting.
And when you're working across the table from someone who's only done one deal in the last 12 months, then you become the expert in the room. Yeah. You aren't so much working with the expert across the table as much as you are almost training them on how. I've been in those arrangements as well, where it's very clear that one person has the expertise.
To be fair, I've negotiated better deals for that very reason, because then I'm almost like walking them through it I'm doing it indirectly, right? Because I don't want them to feel like they don't know what they're doing, but it's just like, hey, just comment that we do this and this, or we do it this way, or hey, by the way, I'm asking for request for repairs. You don't have to accept it, but you are going to have to disclose this to the next buyer. It's just reminding them.
Exactly.
Yeah, because they always have to communicate that.
Courtesy. It's a professional courtesy, and we all start somewhere. And
I agree.
So that's an opportunity to give back as peers in the industry, for sure.
Yeah, for sure. Out of curiosity, so are most of these properties that your clients are bidding on, they like Section 8, basically? Like they're just low-income housing? I mean, yeah, they're government ran?
Some form of affordable, whether that's Section 8 or tax credit or whatever that might be. They're typically some sort of affordable housing.
Got it. And then even there's some property managers, like on some of the properties I bought out of state, they actually won't take those types of properties.
Yeah.
Right. So that means you're working with property managers that are like, they really specialize in this category.
Or at least they're very comfortable doing business in it. Okay. The way I think about it is residential versus commercial. Those agreements are different, and they're different, but they're specializations. And if you've done enough of one, you can probably do the other once you understand the way that it works and some of the deal points, and you end up doing a few of those. So primarily, yes, we work with firms who do this. We also recently have a firm that has never done it before and is really counting on our guidance to help them acquire it. And there's definitely opportunity out there for firms who either really want to grow, really want to get their systems together to do a deal like this. There's definitely opportunity out there.
Yeah, I'd imagine so, because it's always easier to have fewer clients and more units. Like I'd rather have one client with 100 units than 100 clients with 100 units.
Sure.
So I think I know the answer. Has the current government shutdown, now that we've now hit the record for longest shutdown in the history of the U.S., how is that playing a role, if at all?
Yeah, so we are seeing some bids get pulled back right now. I actually had one today that an RFP was out. We were already through most of the process in bidding on that RFP, and it was due in about a week. And so we're most of the way through, and it gets pulled. The government pulls it. That city government decided to pull it for whatever reason.
But they still have to have it managed.
Yes, they will have to have it managed. But so what happens? Just because there's an RFP doesn't mean there's an award towards that RFP either. So it's government. They've got the opportunity to maneuver as they see fit.
But these properties, are these properties they've owned for a long time, or is it as they buy new properties? Are they holding their current property managers accountable by constantly getting updated RFPs?
I think they're doing a couple of things. They are providing an opportunity for fresh blood to come in and try and do it differently. Just like you were saying, the way that we sold houses 30 years ago is not the way that we sell houses today. And the same thing's true of property management in a lot of ways. They are keeping the game honest by allowing RFPs. And also what I've seen lately is a couple of really great organizations who are literally leveling up. So they're looking at the portfolio that they have and they say, you know what, I don't want the headache of property X anymore. I think I'm going to discard that one. And that's going to open me up to grab whatever the deal is over here that is more attractive for whatever reason. Just like in sales, right? There's clients that are a joy to work with and you actually enjoy picking up that phone. Hey, you got the deal, or hey, you know what? I'm so sorry this one didn't go through, but we're gonna move on to the next one, and you can have those conversations. That exists in property management too. And so I think there's a wide variety of reasons that bids come available. Typically, there's a 2-year contract and 3 1-year options. So I think that's part of keeping the whole game honest.
Got it. Which is fair, right? Because it's somewhat tax dollars and all of that. So so here's what I'm thinking on a smaller scale of what's going to happen going into 2026. I'd be curious to get your thoughts as far as like property management concerned. So I think there's going to be, first of all, I think there's going to be more accidental landlords coming into the space. I think people are either going to be inheriting their families' rental properties or they couldn't sell for the price they wanted. So we're going to see more of that. What I'm already seeing now is with a lot of my clients, even me included, we're starting to question our property managers more. Hey, explain this fee, explain this, because it's one of those where property managers say they're out to look for your best interest, but on the flip side, they got to burn and turn these fixes and move on. So it's up to us to review it. And I also think that we might start heading a little bit more towards self-management in the beginning for some of these, just because of how expensive the technology fees, all of that. The only exception is in rent-controlled markets. My hunch is probably about 50-50. I think that you're going to have people who are going to try to self-manage, but then on the rent control, they're like, I don't understand this. I need it to go to a property manager because they know it. They review this day in, day out. How far do you think I'm off? Because I'm okay with being wrong.
No, I think I think all of those things are true.
Okay.
I think
you're flattering me because I'm the host.
No.
Okay. No. Maybe. No, I appreciate it.
All of those things are true. There's always going to be people who inherited mom and dad's house after mom and dad passed away, and then they've got to figure out what to do with it. I think the challenges that come with property management are very similar to and I'm sorry I keep going back to this analogy, but I think it pairs so well, especially for your listeners. Even being someone with a real estate license, I don't do my own real estate transactions because there are people that are far more proficient at it. And each one of those is a major investment. And I'm not going to pull my own tooth. I'm probably not going to fix my own engine. I'm probably not going to insert whatever specialty here. That's the variance that does exist in property management as well. So yes, you can self-manage and no one's going to make the exact same decision that you're going to make as a self-managed person. No one is going to, especially on the house that you grew up in. No one's going to make the exact same decision. The flip side of that is sometimes that's really smart, is that they aren't making that same decision. I had a client, a couple back in Iowa that were really great people. They inherited mom and dad's house. It was the house they grew up in. And you have these conversations from the beginning of, is this an investment property or is this a keepsake? Mm-hmm. Because if this is a keepsake, there are certain things that I can't do in this property to help you get the most out of it. There are times where you're going to push back. Those are the floors that you remember your kids playing on when they were 10 years old and your mom was in the rocking chair over there and you've got these memories. You're not going to let me replace those floors, or you're not going to let me paint that bedroom, or you're not going to let me remodel that kitchen. But if this is an investment property, and the floors need to get replaced, then I'm going to replace those floors with whatever product I think is the best, most competitive product on the market to maximize your investment. So I think those are the conversations that we don't quite have often enough about this self-manage versus property manage. And it's anybody in that situation that's battling that choice right now, it's absolutely fair. And if you don't feel comfortable with that property manager, do not hire them. Manage it yourself. Interview the next 5 or 10 property managers until you find somebody that aligns with your values on that property. I think that's the biggest piece that people are missing. If you're depending on the size of your community, you may have the top 5 property management firms or even companies, but you don't really align on values. Your first question is, what's the rate? If your first question is, what's the rate? Then we're skipping over the value because we're talking about price right out the gate. But a lot of people care about things more than price. But that's the question they know to ask is, what's it going to cost me?
Yeah, and that's fair because I remember we had a property out of state. Insurance came through and did their inspection because insurance companies don't really want to insure anymore. So they give you a huge punch list. I remember saying to the property manager, and I had a conversation with him. I said, look, none of this stuff is necessary. I said, okay, but I'm also not here to be a slumlord. Does something actually need to get done?
Yeah.
Right? Like I'm turning over a rental unit right now, and it's like, the carpets are gross. We can try to steam clean them or we can replace them. I'm like, replace them. To your point, I'd rather provide a better quality product. And then also, as landlords are learning right now, vacancy is a killer.
Yeah.
Which has been the biggest complaint I've heard over the last few months. It's just vacancy. Things are taking longer to rent.
Absolutely.
No, I agree. Going into the next, let's call it the decade or so, where do you see real estate investments and how that plays a role with property management?
Yeah, I think the challenges are going to be the property's not getting any cheaper. Even as we see rates decline a couple percent or whatever, the properties aren't getting any cheaper. We might get cheaper money, but we're not getting a less expensive home. So that's one. So I think there's a lot of tough decisions about keeping mom and dad's house. And I've got a rule of thumb for helping people decide if you're going to keep mom and dad's house or if you're going to become an accidental landlord. That is not a one size fits all solution. It's just my advice around the subject. And so the metric for me is based on net worth. If you keep mom and dad's house as your side business, because let's call it what it is, it's your side business, right? The house is probably already paid for. It's your side business. If you're going to do that in a situation where you're already looking at building your professional portfolio, you're already looking at acquiring businesses as part of the thing that you're doing. Maybe it's car washes, maybe it's gas stations, maybe it's whatever, vending machines. If you're already doing some of those side businesses, then renting out mom and dad's house makes perfect sense. Another key point is if your net worth is over $1 million, yeah, go ahead, become an accidental landlord. If not, then sell that house, split it amongst the kids or whoever, and use that money to pay off your house or pay off your student loans or do something else that actually honors the legacy that your folks built and puts you in a better position for the next 30 or 40 years, and wait for the next pitch on what your investment strategy is. But becoming an accidental landlord just to become an accidental landlord with no interest in property management and no interest in tenant relations, don't do that to yourself.
Yeah, I think for some people, like I know someone who inherited property up in the Bay Area, and they were thinking about keeping it just by virtue of the Bay Area is expensive.
Sure.
So they're like,
yeah,
what are the odds that we were able to acquire a property free and clear in the Bay Area? But then the question I asked, because I knew them well, I was like, look, there's two questions. One, do you want to be in business with your sibling?
Yeah, that's a great question.
These are business decisions that
Yes.
you're going to have to make, including evictions, including finding tenants. Who's going to manage the property?
Yeah.
Is one person going to sit back, or like, how's that going to work? And then the second part that I don't think people always realize is, to your point, most of these properties are paid off. You have step up basis for taxes. The money's tax free. So if you have $1 million asset and you're telling me you can sell it, split between two people, you're collecting $500,000. tax-free, it's going to take you decades to make that $500,000 in rent.
Yeah.
And you still have to deal with a tenant. You still have to do the phone calls. You still have to be in business. It's almost, is there a better use of that cash with way less headache?
And the cash is more valuable now.
Because it's tax-free.
In most instances, unless you just really have a fabulous income, the cash, that $500K is more valuable today than it is in 15 years or 20 years or 25 years. Sure, the asset might have increased, but your focus decreased if you're not focused in real estate. Let's say you're a lawyer, how many more deals could you get done as a lawyer, staying true to your craft and focusing on your craft and taking that payout and putting it into your firm versus becoming a part-time property manager.
Right. To your point, attorney makes $400 to $500 an hour. For every hour they're working on this property, they're losing a billable hour.
Absolutely.
Absolutely.
It's not as fun. I'm sure of it.
I will tell you, it's so funny. People are like, own real estate, it's passive income. I'm like, the only thing that is passive is on your tax return. There is nothing passive about this whatsoever. Even with property managers, they're still not.
Absolutely, because unless you're giving that property manager carte blanche to make any decision regarding your property, which would take a certain level of value alignment that most people don't go for. They think they're hiring they think of it like they're hiring a cleaner. They're hiring a property manager. I expect my floors to be clean. I expect my laundry to be done. I expect the dishes to be put away. But it's so much more complex than that. And I don't mean to diminish cleaners in any way, shape, or form, but so many more vendors involved in this property, and particularly one that you care about.
Yeah. So let's talk about that, because managing the vendors, honestly, it's a difficult part. Like, it's so interesting because I've had rentals here in LA and I've had rentals out of state. I get way less calls here.
Oh, sure.
It was actually, and I think part of it is because they both start off as house hacks, where like I lived in it, rented a bedroom, then became a full rental, whatever. But I also remodeled them. So I think that's part of the reason why I got less calls. It was already a newer toilet. It was already newer things. Yeah. But what are you seeing on like the technology side that's going to drive this going forward? Because you're right, making all those phone calls to all the vendors, that takes time away from other things. So how do we increase profitability with what we have? Yeah.
And the hard part about that is property managers and vendors need to figure out these solutions together. And businesses need to be big enough. The property management firm needs to be big enough to extend that hand to that vendor and say, we're going to give you our business exclusively. I'm not calling another person unless you tell me that you literally cannot make time in this given thing. I will not call another vendor. And in return, the level of communication that I need, our systems need to have some sort of interaction with one another. And that doesn't necessarily mean a full integration, but we've got vendors that we use on properties that we text. And I say, hey, I got a thing. Like, can you come do this thing? I'll get a ticket in. Yep, we're on our way. Boom. Okay, cool. Because that's the kind of relationships that get built when you manage thousands of units. You end up having the ability to just have somebody on speed dial and building those relationships. So that's a piece that needs to come down. That's a wall that needs to come down between the property management firm and the vendor. We need to start acting more like co-interested principals in this transaction, as opposed to I'm hiring someone and I expect X, Y, Z. And I think that can lean into automated resident ticketing. If you've got a specific vendor that you always use for an electrical issue, then tenant puts in a request. Maybe it gets reviewed by a assistant manager to say, yep, that absolutely should go to this vendor. Click. Cool. Vendor gets notified. Vendor gets a ticket. Vendor handles the ticket. Everything moves a lot faster if we just clean up some of the middle things that are slowing us down.
Yeah, I think that's always been kind of part of the problem is, okay, there's a toilet that needs to be fixed. Are you really going to go and ask 3 plumbers for a quote? No, you're going to go get it fixed, get it
Yeah.
done.
Yeah.
And I even have a handyman here. He did a lot of work for me and my clients. And I told him, I was like, look, as long as you do good work at good pricing, I'll give you the business. And he's done me major solids before
Sure.
because we've given him so much business.
Absolutely.
And I do agree. I think that, and I've seen this a lot in like different forums where I feel like some property management companies, the way they advertise themselves is, we're here to protect your asset. We're here to protect your home. I'm like, no, this is a business to business transaction.
Right.
I need to make money. You need to make money.
Definitely.
You're not managing my personal residence. There are property managers that specialize in that. It's usually geared towards like the higher, like ultra wealthy, where like they're traveling all over the world. They need someone to take care of it. But in this case, how can that relationship work between the investor and a property manager to really, to your point, really make it profitable for both parties? Because it is starting to get expensive.
Yeah, it's starting to get expensive. And so multiple things are true here. Like having a property manager is the most expensive way to manage that property. It just is.
Sure.
Just like hiring a mechanic, right? If you could do the brakes yourself, you would. Or maybe you wouldn't, because you got to know.
You do it wrong.
You got to know if the calipers are if you need a new caliper or not. You got to know which way to put the brake pads. You got to know what good brakes, you got to know when to replace the rotor and what that looks like. And if you don't know those things, then your ability to replace your brakes at home without jumping on YouTube are limited, right? Property management, I think, is similar. You are paying for a service. So yes, that light bulb that needs to get changed, which would cost you $4 in parts and 3 minutes of your time. But going back to our example of the lawyer charging $400 to $700 an hour, do you want to worry about that light bulb? That answer should be no. If it wasn't, if everybody listening didn't just yell no, then other issues to be concerned about. But you're paying for that service, and I think it's on the investor to say, I can afford to release some of this control of this asset to free up my time so that I can spend more time meeting people on Bigger Pockets or whatever other platform of networking is appropriate to line up the next deal. It really does need to be, I'm afraid that we see this as property management company needs to make money, investor needs to make money, we all need to make money, boom. The number one way to make a property profitable is to get rid of the mortgage. So if you're buying with debt, then you're going to have a harder time hiring a property manager and getting that property profitable just because it's mortgage. So those are some pieces of the entire thing that have nothing to do with the property manager, but still exist in the true challenges of being an investor. And so the homework comes in all of those facets for the investor. The thing that I really see is property management companies do too many favors for their favorite investor, and they don't charge enough. And so when they don't charge enough, they don't make enough money. And because when they charge the appropriate amount, they can't pull in the investor client. Okay, we've got a broken system, and you can't outsell the stupidity of this system. We've got to do this a different way.
I'd be interested, I thought about this once. I was like, okay, really property management, with all their fees, the studies have shown, including Bigger Pockets report on it, it's actually about 15 to 18% of the rents.
Yeah.
I almost wonder, what if property managers just charged a flat 13%?
Sure.
Or a flat, no markups. We don't charge to find a new tenant. As an investor, I know I brought that up to some investor clients of mine. They're like, no, because that can fluctuate. I'd rather pay less some months. But for me, it's almost like, yeah, but to your point, you want to delegate as much as you can, because as an investor, your sole job should be to source deals. analyze these deals. So I'm kind of curious, okay, if it was a fixed rate, it's just that much easier to analyze. Okay, 13%, even 15%, that's it.
Yeah. Yeah. And back to your B2B scenario, if it's truly B2B and there's enough units and the property management company and that investor have a tight enough alliance, then I think that absolutely opens you up, Rick, to say, this is the percent that that I'm willing to be charged. And these are the agreements, right? Just like when you've got thousands of units in a small town, you can decide what market rent looks like because you are the market. And
right.
I think that's true for investors too. At the point that investor is a meaningful chunk of the portfolio for that property management company, they've got a lot more say on how that, and I've seen it I was debating whether or not I'd call them out, but I've seen it in a property management firm where essentially one client has 50%, has almost 8,000 units of this particular property management company's portfolio. That client with those 8,000 units got to say a lot about how the property management firm ran their SOP,
super dangerous,
their reporting, their everything. So it was almost as if that property management company existed just to serve those 8,000 units and managed somehow to have some additional secondary clients.
But even on a practice, it's super dangerous. The minute they leave, you're screwed.
Yeah.
You're totally screwed.
Yeah. And they get to just run your company. They get to jockey for position within your organization. And I think that's a very dangerous place for a regional property management firm to live and operate as well. You always have to please that one client, regardless of what it may mean for your others. Yeah. I don't think that's
right. Like you have to and ultimately prioritize them over the other however many units you might have. So for the ones where they're working with the city, do you start to see some of that where they're like, look, we're going to prioritize the city over these other ones because of the contracts we have in place?
I haven't seen that, but what I do see is property management firms be a little more lenient with a city organization than they would if that request came from an owner who owns a single property. So it's not quite, they say jump and the question is how high, but it is like, it does teeter on best business practices, let's say. Does that make sense?
Yeah, no, to be fair, I'm assuming these properties from the cities are not single family homes, they're units.
It's actually a wide variety. Some of them are 50-acre communities with 500 units, and some of those units are townhomes, and some of them are apartments, and some of them are whatever they are. And then there's one in particular that's got 4 or 5 complexes, and you think to yourself, oh, I can do 5 budgets, no problem. And then you find out they've got 85 scattered sites that are all duplex, single family home, whatever, condo, whatever they might be. And so you're looking at this deal like, man, this is 1,000 units. I can really do some damage on 1,000 units. This is great for my portfolio. Right. And then you figure out that you have to do 90 budgets and your accounting team has to account for 90 and reconcile 90 budgets. It's a different sport there too.
Yeah. Okay. Fair enough. They could be a different variety. So looking forward, what should investors be focusing on? Because there's change happening, right? We are seeing longer vacancy. Rents have gone down in some markets of the country, mostly because they're overbuilt. But what should investors be doing going forward?
I think the thing that I'm seeing the professional investors do versus the people who are working their way into the game. The professional investors are taking on a good deal right now, not waiting for the grand slam. They know that at scale, they'll get enough deals. And if they pick up $5,000 this year or 10 grand or 15 grand, that they can put that into their next deal and snowball. And it doesn't need to be $100,000 payout in this quarter or this year or next year even. So the long-term thinking and the snowball effect of that, I think, is allowing professional investors to stay up on the curve and still, without risking too much in the market, they're able to gain a little bit of position. They're getting yards right now. They're not getting touchdowns. It's not about touchdowns. It's about getting that first down and restarting the clock.
So I work with a lot of beginner investors, and I meet a lot of beginner investors. Sure. And we talk, and all they care about is the home runs. To your point, all they care about is 100% seller financing. That's what I'm looking for. I'm like, sure. Do you have any money in the bank? No. Do you have any experience? No. Then who is going to give you 100% financing and keep the deal? Like, and so then I keep meeting them at all these meetups, and I'm like, hey, how's it going? I haven't found that deal yet. How are you doing? I'm like, I just bought another one.
Yeah.
Like, you keep doing your thing, I'll keep doing my thing. So it's like between the base hits, and the goal for me at least is to try to buy at least one rental a year, right? So it almost becomes like dollar cost averaging.
Right.
So up market, you buy, low market, you buy. It all works itself out. If the market tanks, it's a paper loss. You don't have to do anything. No one's saying you have to sell. No one's saying you have to refinance. You just keep doing what you're doing.
Absolutely.
That's very cool. Okay. I really appreciate this because I know we're getting close to the hour. If we had to give the listeners kind of like one big advice, what would it be?
Ooh, property management firms, investors. Who wants the advice?
Damn, this is the first time I've asked the question, so I wasn't expecting a question with a question. We'll start with property managers, and then we'll start with, because there are some that are even self-managing, and then we'll go to investors.
Sure. For property managers, I think my number one, and this has been my number one for probably 2 or 3 years now. It has not changed. For property managers, stop doing the things that you pay someone else to do. Let me clarify what that means. If you have a leasing team that works under you and you ran an application this week, stop it. Don't do that anymore. That is a broken system. And if you continue to operate in a broken system, you're going to continue to be stressed out. You're going to continue to stress out your spouse. You're going to continue to not be at your kid's soccer game. You're going to continue to not hit the gym the way you want. You're going to continue to order in when you brought a salad, but you're like, oh man, I don't want that salad today. I'm going to order in. Oh, I wish I was 30 pounds lighter. Man, like each of these little pieces, if you're constantly just putting out fires all day, every day at your property management firm, then that's a broken system. You wouldn't pay someone $100,000 a year to run those applications. Why are you running those applications yourself? Do not. That's my advice for property managers. And then obviously go bid on government contracts. Whether that's with me or on your own, go do it. Go put a few under. And we've got some products to help people get aligned if it's their first time doing it. But that's, if you're thinking about doubling your unit count or tripling your unit count in 12 months, I'm here to tell you it's absolutely possible. And the best way to do it, in my opinion, is to do it through a government contract.
Nice. Okay. Very cool. And then for investors, keep chugging along, stay at a high level.
Yeah, chug along. Take that base hit. Let the ball get stuck in the wall. That's fine. It's great.
Yeah. I told people it's okay to stumble as long as you're stumbling forward. It's fine.
And it's okay to take the L too on that property. That's part of that process. And if you don't trust yourself enough to take an L on an investment, then you're never going to build the reps that you need to get that grand slam. Yeah. You're never going to pick up the bat to swing because you'll never swing at anything. It'll never be a good enough deal.
Yeah, no, for sure. All right, James, thank you so much for coming on. How can people find you?
Yeah, you can find us at awardedrfp.com.
All right, very cool. Thank you again for coming on. And
Thanks,
for those
Doug.
listening or watching, thank you so much. And I'll talk to you guys next week. Thanks for tuning in to The Key to the City of Angels. I hope you found today's episode helpful as you navigate the world of Los Angeles real estate. Whether you're looking to buy your first home, expand your investment portfolio, or sell in this competitive market, I'm here to help you succeed. Let's connect. Visit my website or follow me on social media to learn more about how I can help you achieve your real estate goals. And if you're ready to take the next step, don't hesitate to reach out. I'd love to work with you. If you've enjoyed this episode, be sure to subscribe, leave a review, and share it with someone who might benefit. Together, let's unlock your potential and make your real estate dreams a reality.